Hello students, I Prabha Sharma welcome you to the next content of the financial statement with adjustments. Today I will tell you about the how to make the adjustments of closing stock, outstanding expenses and the prepaid expenses. Now you may see here the adjustments of the closing stock. The closing stock represent the cost of unsold goods still exist in the go down at the end of one accounting periods. What will be the effect of the closing stock? Number one, by crediting to the trading and profit and loss account and by showing to the asset side. It means the journal entry is referring to closing stock to the trading account. Closing stock is debited. It is a part of the asset will go to the balance sheet asset side. And the two trading word is referring the credit side of the trading account will be listed with the name of closing stock. Closing stock of the year becomes the opening to the next year and it is reflected in the trial balance of the next year. Sometimes the opening and closing stocks are adjusted through the purchase account. It means then the entry will be passed closing stock to purchase account. So when the entry is passing closing stock to the purchase account, then the closing stock will go to the assets and the value of the closing stock will be deducted from the purchase. You have the two options, but the option number one, closing stock to the trading account, is getting much popularity. Now you may see outstanding expenses. What do you mean by the outstanding expenses? When the expenses of an accounting periods remain unpaid at the one accounting periods. So that's why they are called as outstanding expenses. Such items are related with the expenses called wages, salaries, interest on loan, etc. Now, how will you pass the journal entries? Entry will be passed expenses account debit to outstanding expenses like wages account debit to outstanding wages. So when a wages is there debited, it means the wages will be increased. And the second is the outstanding wages word is referring to liabilities will be increased. So outstanding expenses referring to the liabilities and the concerned expense referring to increase the value of concerned expense. So what is the effect? Outstanding expenses will be shown on the liability side in the balance sheet and the value of expenses will be increased under the head of may be related to the trading accounts or to the profit and loss account. Here the one example has been given. Wages shown in the trial balance 8,000. Suppose 500 is still have to pay. So how will you correct? The wages of the trading accounts will be increased by 500. That means will be shown with the name of 8,500. But the 500 still have to pay. That's why it is a part of the current liabilities. Will be listed to the liability side of the balance sheet. So you may see the one elaboration of the particular concern item is given with this account debit to outstanding 500 adjustment is there only. Now see the third adjustments like prepaid expenses. The meaning is referring to the part of the expenses which relates to the next year, coming years called as prepaid expenses. What will be the journal entries? Prepaid expenses to the concerned expenses. That means, like at the end, you may see the prepaid salaries to the salary, prepaid wages to the wages. What will be the effect? The concerned expenses will be deducted with the value of adjustments and the prepaid expenses will go to the asset side. So, effect you may see the prepaid part of expense will be deducted from the expense and will be shifted to the asset side in the balance sheet. Like One example is given, the 5,000, that means paid to one employee, and it is refers the overpaid by the uh, 5,000 to the employee. Then what will be the correct answers? That means the current year, suppose 25,000 is listed in the trial balance, then 5,000 is prepaid, paid in advance. Then 5,000 will be deducted out of the 25,000. Only the 20,000 expense will be shown as salary in the profit and loss. And the 5,000 which has been deducted go to the asset side, current as a asset. So I think this is the shifting of the one account to the another account also. Thank you. Thank you.